Well, thank you, Tom. It's awesome to be here as always. I love talking with you and talking crypto with you. And basically, 20-year trader. I'm mostly in stocks and commodities, but branching into crypto over the last 5 years or so. And the beautiful thing about it is I'm a chartist. I'm a purist in that way. So I don't care what the news is. I just trade what the charts are showing me. So it works for stocks, commodities, and crypto. And I'm able to basically generate alpha that way. So the only project now that I think everyone should check out is verifiedinvestingeducation.com. It's basically everything I know in a 3-course series. And, it's kind of my legacy, right? I could die tomorrow. I won't place another trade, but people can still learn how to do everything I did. I think it's so crazy how, you look at what happened with FTX. A while ago it was Terra Luna, Celsius, Voyager. Go on and on, but there's just black swans everywhere popping up. It's almost becoming a common thing, unfortunately, in the crypto markets. But let's hope that, and this is what I'm seeing now, is I think that this breakdown is the beginning of the end, meaning the beginning of the end of the bear market.
Yeah.
Where I think that, yes, we're going to go lower, but wherever we bottom here, that's going to be finally the bottom. And usually that in markets, whether it's the stock market, that final panic, the one where, you saw big money losing on FTX, you saw small money getting crushed there. That's usually the end where people finally give up. And that's what we're getting to at this point, at least. Yeah. So lucky for me, I've always been a purist in terms of like, I haven't been scared of regulation, right? So my accounts are at Coinbase, Kraken. I think Kraken does like 2 audits a year.
Yeah, I love Kraken.
Coinbase is publicly traded as a stock, so I think there's some SEC oversight. So it makes me feel a little bit better. But one of the things I always say is that, if you have, it doesn't matter if you have 5,000, 10,000, or 100,000 or $1 million, it's smart to kind of take portions of that and spread it around different exchanges, because Absolutely. If one goes belly up, at least you're only losing 10% or 20%, not 100%. And it's just basically risk management. It's crazy in this day and age that you have to decide, it's not a matter of does Bitcoin go up or down or crypto go up or down. It's, does my exchange basically take my money and run? Yep. That shouldn't be the way it is, but it's crazy with FTX. It really is. I think this likens back to Enron for me, to WorldCom. Some in the early 2000s, there were stocks that did some shady things and they went bust. And it's kind of a growing pain for an industry. I think it's something that we have to get through. It's going to force regulation on the industry, which I know everyone hates, but at this stage, I think we all have to admit we need some sort of clarity, some sort of rules, so that investors feel safe. Really, as an investor, your only concern should be, is my crypto going to go up or down? Not am I going to wake up tomorrow morning and my money's vanished, right? And that's where we have to get to. Yeah, I just briefly heard about it today, and again, that's the Winklevoss twins, right? That they're involved over there, and again, this is the thing, is like it's basically when they say when the tide goes out, that's when you see who's naked and who's wearing a bathing suit, right? And when Bitcoin and crypto is collapsing, it's going to show the bad actors. Anyone who took over leveraged risk is going to get kind of hung out to dry. And one of the things you always remember, and I learned this from stocks, is like, if you're in a stock that promises too much, and a lot of these crypto exchanges, they're like, oh, we'll pay you, you invest in this coin and you're going to get 20% or 50%. There has to be a point where when the merry-go-round stops, you have to get out of those scenarios because it's too good to be true. And I think that's what we're seeing now, is a lot of these players were just promising too much. Interesting now is, so when we were at 65, 69,000, it was all about, oh, I got to go long. I got to jump on this train, right? And now what you're seeing is as we're down in this 16,000 range, and my downside target is now about 9,000. A lot of people are like, well, do we go short, right? Do we go short now down there? And what I say to them is, if you took the chart of Bitcoin and you flipped it around, it's basically like you'd be buying at 60,000 now. Essentially, right? 16,000 to 9,000. So you have to say, was that a smart move to buy at 60,000 or 65,000? The answer was no. Well, then the same thing to me. Yes, I still think it's going to go a little bit lower, but you're so close to the bottom, in my opinion, now, it just doesn't make sense to short it. If anything, I'm starting to kind of slowly, like every 2,000-3,000 down from here, I'm starting to accumulate Bitcoin. Stocks more so. I have been very nimble in crypto on the way down, just kind of buying in and jumping out a little bit. But it definitely is. I'm not sure about the rules in crypto. Like, like, you know, how long do you have to, is it the same as stocks? You have to wait 30 days before you repurchase
I
to
don't
like
believe.
yeah, so if I'm not sure what it is, but just make sure you talk to your tax professional. But you know, if you
Yes,
made 100K and you have 100K loss, why pay that tax if you can avoid it? Just have
exactly.
it washed, and then you know, back in January, whenever you're able to buy back in, just buy right back in with that same amount. So, and I don't think price is going to go that crazy where you're going to get a materially huge difference in price between, let's say, December 31st or
Mm,
whatever, and January 2nd or whatever it is. So a couple things on the charts, and so one of the things that I've been recognizing is that the FTX collapse is very, very, very similar to when Lehman Brothers failed in the financial crisis. Right,
okay.
we were already down significantly in the stock market, and then we saw Lehman Brothers fail, and it was kind of like that big blow up in the industry.
Hmm.
In this case, it's an exchange, but you could argue that the exchange is the banking side of crypto. So it makes sense that it's very similar. You saw big money get hammered when Lehman Brothers collapsed. You're seeing big investors, big money get hammered in this scenario. You know, the
Yeah.
third biggest exchange it was, and Lehman was one of the biggest banks at the time. So the same sort of things are occurring. And what I did was I went back on the S&P 500 and I said, okay, from when Lehman Brothers collapsed, and we're going to go back to 2008 here and take a look. All right, so here it is. Here's Lehman Brothers, and it basically was the last final collapse before the markets bottomed. And so I said, okay, what was the time frame? And if you look here, it was on September 15th that Lehman collapsed, and the markets bottomed March 9th. So that was approximately
Yeah.
5 to 6 months. So in my mind, now I have a kind of a potential game plan for that to bottom out. Now, interestingly enough, the markets bottomed out on the S&P in 09 because the Fed started printing money, right? Well, you could say, well, what would be the equivalent of that in the crypto markets? Well, the Fed's not going to print money. We know that. Not until inflation is under wraps. It's certainly not going to happen by early next year. But I do believe that the equivalent for crypto would be getting transparency and regulation,
Hmm.
where you're going to have money finally feeling safer to enter
To
the
flow in.
crypto sphere. And so it's very likely that with big investors, in fact, Kevin O'Leary was saying this the other day in his interview. He's like, I'm going to go to Washington right now and demand for regulation because he got burned with
Yeah, he did.
FTX. Yeah. And so to me, I'm like, okay, well, the way crypto goes up is if you draw a lot of money in. The only way that's happening without the Fed printing is with regulation, which creates transparency. And so
Mm,
the idea is within 5 to 6 months, I do believe that the government will have a framework, that Gary Gensler will have a framework for this. And I think then money will start to flood back in on crypto. Now, in terms of my target for 9,000, what I did was I said, okay, if we look at the crypto market, right? This is where this is the S&P. So this was the high on the S&P at around 1600. When this occurred, we were around 1200. And then how much further did we drop? We dropped to about 600 and change. So to me, it gives me a framework saying, okay, 40 to 50% downside from here. That puts us at around 9,000. I also think that the 10,000 break is going to be a back-breaking event for a lot of individual investors, which is
mhm.
usually how bottoms are formed when they
Definitely
finally throw up their
psychological.
hands. Psychological,
Yeah, we
right?
lost a
So,
digit. It's over.
right.
Yeah.
So they're going to say, oh my God, it just broke 10,000. This is a catastrophe. And they're going to generally, people will be triggered emotionally to
Yep.
dump at that point, which oftentimes marks the bottom. So that's where I'm coming up with it. The last thing I want to share with you guys is, everything comes back to charts with me. And
Same.
interestingly enough,
We love
if,
it.
yeah, interestingly enough, if we take this trend line, let me put a trend line on here. If we go to the pre lows before the 2017 highs, and we put a line there connected to through the collapse lows of 2018 and 19, it coordinates perfectly with the 2020 COVID low. And guess
Mhm.
what price that is? Right now it's about 8,600. But in a few months, in let's say 4 or 5 months, it's probably around 9,000 because it's an
Okay.
upsloping trend line. So then you have a trend line which would be basically taking crypto back to this longer term trend line that would also match up with that cycle, with that correction. So for me, again, listen, just like I could be so far off it's not even funny, but all we can do in the technical analysis world is look at what probabilities are telling us, look at
Absolutely.
history for guidance, and do our best to make decisions.